Hey guys, I just want to dedicate a short video as to why I believe by combining into a single narrative that Bitcoin as a global monetary network and Ethereum as a smart contract technology blockchain, if you can kind of merge the two into a much more powerful narrative, that would really set these two as the leading assets, digital assets, from the rest of the shitcoins that are out there. So basically, what do I mean by that is, we all know that Bitcoin is gaining huge adoption into the mainstream, into the traditional financial system. So you've got the TradeFi, right, on the one hand. And then on the other hand, you've got Ethereum, which is a major smart contract technology blockchain. And it's not to be snubbed at, really, because it's almost $500 billion market cap Ethereum, whereas Bitcoin is almost 1.5 trillion and it's growing. So if you could add these two together, combine these two, it's $2 trillion. So if we can somehow treat Ethereum as a layer 2 within the Bitcoin network. I know that Bitcoin layer 2 scaling solutions already have its own smart contract capability. You got the Taproot that's initiated. It's like a fork upgrade of Bitcoin. Besides the actual efficiencies that they've incorporated as part of that release, they've actually included a smart contract capability. And also there's another one, layer 2 scaling solution. It's called Stacks, which I think they have a smart contract program manager called Clarity, I believe, right? That's just starting out. So I think since Ethereum already has a larger chunk of the smart contracting share, the lion's share of the smart contract blockchain, it would make sense to me to treat Ethereum as a layer 2 within the Bitcoin base layer, right? And that's what I mean by combining both into that single narrative as a truly transformative digital blockchains for monetary on the one hand and smart contract on the other, all within the same Bitcoin network. Just treat Ethereum as a layer 2 within the Bitcoin network base layer. Now, this is important because we're already seeing a wave of major real world assets tokenization deals. So we've got Mantra, which is like a fintech that's actually struck a deal with Mag Group, which is a realtor, Dubai based, $500 million worth only this year. And if you look at the real estate market cap at the moment is 2.7 billion as of 2022, and it's projecting a $16 trillion market cap just for real estate tokenization alone by 2030. And that's an analysis made by Boston Consulting Group. There's other use cases, right? So we've got tokenized treasury bills, predominantly US treasury bills, and it's reached a milestone of almost $2 billion worth. And it's actually hit, that's interesting, because they've actually hit its first billion, but within 5 months, right? So in 5 months it's 1 billion, and now it's $2 billion, and is growing, right? Because lots of central banks are issuing debt into the debt markets through bonds. So if you tokenize that, that is a tremendous opportunity in the blockchain. Also, there are other use cases like fractional ownership around stocks and shares in the TradeFi space. Interesting. Tokenized bonds, as I mentioned earlier on, that's another major use case. You've got investment funds, you've got commodities, you've got indeed stablecoins, even fractional ownership of private equity, derivatives, insurance products, so things like home insurance, life insurance, car insurance, debt financing. So as of today, in terms of real world assets, coins, so individual projects, is around just over 100, and it's almost just over $32 billion worth of market cap. So what do I mean by this is there is a tremendous opportunity to be had in the real world assets tokenization space. So by combining into a single narrative, as I mentioned earlier on, Bitcoin as a global monetary network and Ethereum as a layer 2 scaling within the Bitcoin network, that would certainly set itself far apart from the rest of the shitcoins that are out there that are only confusing and making matters worse for investors out there, because it's just too confusing, it's too overcomplicated, and history has shown that most of them actually go down to zero and go bust. So, and both Ethereum and Bitcoin are already legitimized the ETFs in major countries. You've got the US, you've got the Hong Kong and Australia, and a handful of other countries have already legitimized Bitcoin spot ETFs and Ethereum ETFs. And also earlier on this week, the BlackRock Bitcoin spot ETF, they've actually approved the Bitcoin options. So these are like selling shares of the original IBIT, the BlackRock Bitcoin spot ETFs, in the options market, and that is another hundreds billions of worth of market cap opportunity there. So if we combine both these two into a single digital monetary network within Bitcoin, this would certainly draw in more liquidity into the market space in that domain, and entice investors into that and divert themselves away from the shitcoins, the confusion, and all the rest, which, as I said earlier on, they dwindle into zero very quickly and they are no use. It just makes matters worse. So that's really what I want to explain here in this video. So if you enjoyed this short episode, please don't forget to hit the like button of this video. And if you haven't done so already, please subscribe to my channel, because I actually offer both educational and latest insights and development episodes. And also within that, you can see videos on real-world assets tokenization, also the Bitcoin layered model, so that you've got the layer 1, the layer 2, and the layer 3 apps that are sprouting out from the fintechs. So look into those videos. Hopefully you found this interesting, and I shall see you next time.